Hey guys, Steve Zalunardo here with Remax West Zalunardo Associates. We're here with the monthly review. We're in the month of November, but we're going to talk about October and we're going to overlap September and October and let you know how we did with market statistics. In the month of October, sales have gone up 8%, so month over month. So October over September, the sales have gone up 8%. Average sales price gone up about 2%, and new listings dropped down 15%. So based on this, we're seeing even now into November, like grossly selling or properties selling for astronomical amounts of money. We're seeing this huge rise still going forward. I'm curious to see when we do the November over October report, and I'll show you there the rise of the average sales price there, because we're seeing properties selling for probably $100,000, $200,000 more than they would have sold maybe a month and a half ago. So it's quite interesting. Regarding the market going forward, we don't know what's going to happen. Obviously, we saw that the 5-year fixed mortgage rate rose a few times. We're up about maybe 50 to 60 basis points where it was. So basically the big 6 banks rose their 5-year fixed to, I think right now CIBC is probably lowest at 2.4%, but TD and RBC are probably at 2.6 and change for 5-year fix. Naturally, when you're dealing with a mortgage broker, they can get this rate lower, but these are the posted rates, and this is what we go by on a daily basis. So knowing that interest rates have gone up a few times, which is nothing to be really concerned about, because we know that the bonuses of the CEOs of these companies are looking, they must have met their quota for the year, and now they can start raising interest rates. But the only thing that would concern me here now is the Bank of Canada stopped the quantitative easing, so basically that the bank's liquidity will start to dry up, and that's obviously going to affect us because interest rates are going to rise, and how they're going to lend money in the future and who they're going to lend money to the future. So if there is going to be some sort of correction or a price correction, this will be a nail in the back for sure. And so even if there is a lull period, it probably should be at some point, even if there is a lull period, we have the immigration. Once the immigration opens up, then, brace for impact, because it's going to be quite havoc. So we'll wait from there. And if there's any advice to my clients buying properties right now, just make sure whatever you're buying is the best deal on the market, especially if it's an investment property. Just make sure it's the best deal, and it's going to cover all expenses going forward. Because if the market's going to dip, it is what it is. It's a long-term investment, so if it dips, it's fine. You're holding it. You're collecting your passive income. It's not a big deal. If you're buying multiple properties and think you're going to refinance them and do a whole bunch of different things to them, because a lot of people want to purchase properties with other people's. The problem with that is other people's money doesn't come to you for free. That's usually lent to you with an interest rate attached to it. So make sure that everything's covering, because if the market did shift in the future, you're going to be in trouble. You're going to be on the hook to pay those expenses going forward, and especially if you're. Obviously right now we have a 0% vacancy with the tenants currently right now, but if you always got to look at the worst case scenario, this tenant gets laid off or he stops paying, you're going to be on the hook for that payment plus all the expenses. So just make sure you can cover. And it's going to sound boring, but I always say it's a game of chess, not checkers. So make sure you cover the board the best way you can. And that's pretty much it, guys. If you have any questions, please reach out. If you like these videos, please like, share, and subscribe, and we'll get you in the next one. Ciao.